Hello there.
Hello there.
General Kenobi.
How's it going, everyone? Welcome back to my WooTube channel. It's your boy, Brandon Woo, coming at you pre-recorded because we're not live. Today's video is going to be the first of many on how to actually begin investing. So today we're going to be talking about the stock market, different investment accounts, and why you should be putting your money into it. Investing is a way to have your money work for you.
I like that.
So what that means is you're going to be investing it by putting your money into something that you believe will grow. Oftentimes it's going to be companies like Apple, AMD, Tesla, NEO, etc., etc. You may be wondering, what even is the stock market? Well, it's this silly little thing that refers to one of the major stock market indexes, such as the Standard & Poor's 500, also known as the S&P 500, which tracks the top 500 companies, as well as the Dow Jones Industrial Average, which groups the prices of the 30 most traded public companies. Now you're wondering, how does the stock market even work? You can think of it as a virtual auction house for millions upon millions of shares of different companies, all scattered throughout the US that are publicly traded. So now you're thinking, how does the stock market even work? Well, typically there's two players in the game. There is the bidder and the asker. The bidder is the person wanting to buy shares of a company, while the asker is the person wanting to sell shares of the company. These two players can work out a price to exchange the shares at hand. Say, for example, me and my good editor / cameraman Dalen wanted to trade a good share of Tesla. Everyone loves Tesla. I wanted to sell at a certain price. He wants to buy at a certain price. We work together to figure out what price works best. And we can do that exchange, and we do that through the brokerage. Hang on a second. What even is a brokerage? Simply put, it's a company that acts as a middleman that connects the buyer and the seller to facilitate the transaction. The first type of retirement account that we're going to be talking about is a traditional IRA. So what is that? A traditional IRA is simply put a retirement account where you're able to put money in tax-free initially, and then as that money grows, as it's invested in either individual shares of a company or a index fund, which we will talk about later, it's still continued to be tax-free, and it's only taxed once you're taking money out of it. The person who this account will best be suited for is someone who's making a little too much money.
Brooklyn, my father gave me a small loan of $1 million.
To be putting it into a Roth IRA, which we will be talking about next. So they are able to lower their income, meaning they are paying less in taxes, and once they are in a lower tax bracket, they can pay those taxes later when they withdraw. The traditional IRA is going to be best used for someone who is in a current higher tax bracket now than they plan to be when they are into retirement. The next type of retirement account we're going to be talking about is the Roth IRA. This account is one where you can contribute after-tax money, meaning that the money that you're putting in is currently being taxed. This type of account is best used for someone who is in currently a lower tax bracket that they plan to be when they retire. The final retirement account we're going to be talking about is a 401k. A 401k is a retirement account where the company that you are working for sets it up for you, and oftentimes they are also going to contribute some money to it as well. For example, I work at Starbucks, and they also offer a 401k. You can choose between either pre or after-tax money, so a traditional IRA or a Roth IRA. And they also offer a 5% match, meaning for every 5% of my paycheck that I am putting into it, the retirement account, they are also going to contribute an additional 5%. The benefits of a 401k is rather than you having to take it from your bank account and putting it into another retirement account, it takes it directly out of your paycheck. If you want to begin investing and you've already set up a retirement account, the next step for you is going to be investing in a brokerage account. Now, we already talked a bit about a brokerage account, and here's an example. Got my phone here, and right now we are on the Robinhood app. Robinhood is a free commission investment brokerage account where you can buy and sell shares of any company that is being publicly traded. For instance, let's just say we wanted to look up our favorite overlord, Apple. We would just go ahead and we could either look up the name Apple like this, and we could just go ahead and click on them, and we already see a few things. Right here on the top is the ticker symbol, right under is the name Apple, and then here is the share price. And then you can see how much they have moved within the day, and you can change that down here. We got between a day, a week, a month, 3 months, 1 year, and even 5 years. Now, if you want to buy shares of the company, the only time you can do that is between 9:30 a.m. to 4:30 p.m. Eastern time, or for our time, the better time, Pacific time, it is going to be between 6:30 a.m. to 1:30 p.m. But just to give you a little run around how it goes, you would just go ahead and press trade. And if you're only starting, you're not going to see this trade options button. It's just going to be sell and buy. I will talk more about trading options in a different video. We'll go ahead and press buy. We can change a number of different settings. For example, if you want to buy a number of shares, you can go ahead and just type in however number of shares you want to buy. The market price is what it's currently valued at, and then the estimated cost is pretty much the exact same thing. So if I wanted to buy 2 shares, the market price is still going to be the same, but the estimated cost is just going to be double that. The nice thing about Robinhood is that if you want to, you can do fractional shares, which means you just buy in a dollar amount starting as little as $1, meaning you don't have to drop the full $122.33. If you wanted, you can only put in $60, around half the price of a share, so you would own half a share. And then there are also conditional orders, but we will go over that in a different video as well. Just a little tour around Robinhood. This main page here is where you can see all your different investments. We have options. Again, I will talk about that in a later video. And then we can see the stocks we have, their names, the graph of how they went throughout the day, the number of shares, and of course their market value. Scroll down a little bit, you can see the watch list. You can add any number of different companies there. It's just a way to keep track of companies that you don't currently own but want to keep your eye on, just in case you might want to buy low, sell high, not the other way around. In the middle is the search bar, as we had already seen. That's where you can look up companies, or you can go through these different lists such as the 100 most popular, the top movers, index and ETFs, and more. The messages here just show the different number of companies that you are buying from. They'll just give you notes of when you were buying or selling. This final page here is just more about settings, different things like investing, transfers, putting money in and out of your account, your statement histories, more actual settings, and then help if you ever need to contact Robinhood. Just a disclaimer, I am not sponsored by Robinhood, although it wouldn't hurt. Be sure to use my referral link if this is going to be your first time investing. That way you and I both get a free share of a company valued up to $500. If you enjoyed the video, you will like the video and subscribe.